Hi, Ezekiel here. Alright, so this is part 2 of the A to Z, everything you need to know about Forex trading, all compiled in this video. So if you haven't watched the last video, please watch the last video. This is where I dissect the chart completely with just pure, naked price action charts. Alright, so if you like naked reading, naked chart reading, that was the video that you want to watch. So it was the same video. I used the same, it's the same chart, right? I used the same chart where now I added the clothes in. I put on the clothes in, I put on the indicators in. This is where we will add in our arsenal to make it a more comprehensive, higher probability trading. Alright, so if you haven't watched the last video, watch it first and then watch this video, because this is where we will get everything together. Everything you need to know about trading from A to Z. So really let me know what you think about this kind of video that I'm making right now. Let me know if you think it's good. If it's good, why? If it's not, why? Just let me know how you feel so that this will spur me on to create videos like this. Alright, so I'm going to load the MT4 chart. Let's roll. Hi, welcome to part 2 of chart reading. Right? So if you haven't watched the last video, please go and watch it first, because in the last video I have covered on how I have dissected this chart purely with price action and without any indicators in the chart. So this is as naked as it can be, and this is how I have gone through on how we can read the chart, where we plot our entries, where we plot our exit, and in exact detail on how can we know in a way where the market is going and how can we trade in line with it. So please watch the last video if you haven't already watched this video. That is what I'm trying to do right here, is I'm trying to give a complete framework of how I trade from A to Z. So this is what I try to do. I really hope you like it. So right now this is a continuation series whereby I will now start to add my indicators. So the first indicator that I'm going to add is a moving average. So it's my 150 moving average. Okay, so I will add it over here. So if you see, once I've added this line, it kind of shows in the previous video. What I did is that we drew a lot of lines over here, right? We drew a lot of lines. We drew the line here, we drew the bottom line, right? But you see, when I add my moving average, I no longer need that line. Or had I not drawn that line, had I didn't fail to see that line, this moving average is the line, the bottom line. And in fact, it now acts as a confluence. Let me draw this even as a straight line. Okay? It now acts as a confluence where I have my support and resistance line coupled with my 150 moving average. So now this area becomes all the more powerful because we have two strong rejection levels over here. So this is right now the middle line, this is the upper line, this as a zone is the bottom line. So price is in this zone. These are the three main lines. Yeah, these are the three main lines. If you want, there's a little line over here. You see there's a high over here, and that's the reason why price is stalling over here. It's stalling over here. So but of course we don't need that. To read the chart, we try to keep it as simple as possible. Yes, we do need to know all these lines, but to try to keep the chart as clear as possible, let's have minimum lines. Okay, so the next one that I'm going to add, so okay, hold on first. With this, let me move. With this moving average over here, this is the recent chart setup that we have spotted. The one that I spotted in my Asia Forex Mentor GoldenEye group, right? So this is where
we have spotted where price is going up and is getting rejected by this strong rejection line, which is my 150 moving average. Okay, so what we can see is that price go up and got rejected in the form of pin. So the pin, this is a weekly time frame, so which means that this week what we can look forward is to go for a sell momentum in that week, and see this coming week it went down, so it means the pin bar work. This is kind of how we go. We don't expect price to with one pin and this, hey, this is just a small pin, not a big long powerful pin. We can't expect this pin to go down forever. What we can expect it that its job is only for it to move the next bar. That we should just keep this as an expectation, nothing more. Anything else is a bonus. Okay, so it did work, it did its job. Then after this pin, the next bar did go down, and then after that the subsequent bar went back up to test again the 150, but it couldn't, and then we went back down to form another pin. So price tried, couldn't, tried, couldn't. So there's no point trying again, because there is just not enough momentum to keep trying. Right? There's just not enough momentum. There's just not enough momentum to keep trying. So it tried, it went sideways, it tried, it went sideways. So if it's going to go sideways, it's going to try again, likely it's not going to break. So what it needs to do, it try, go sideways, it try. What it needs to do is that it needs to go down. This is how the market works. It needs to go down. So a lot of times when traders start looking at this and they start seeing that, hey, wow, take a look, the market is going down. So what does this mean? I think let's sell here because the market is going down. And you see what happened next? It turned back up, and all those that placed a sell order over here, they all got stop out. So it should not be a sell when you look at the chart with this kind of understanding. When price tests, when price couldn't break through, be it sideways momentum, do remember this point. Price needs to go down first to gather momentum so that it can break up. So for example, yes, price did go down here, but I will not be looking to sell. In fact, I'll be looking to look for opportunities to buy at the dip, at the breaking point, at the point of the break, so that I can go for a buy upwards, to be in line with the trend, and to eventually, when it tests the one time, when it tests the second time, and when it tests the third time, this will be the point whereby it will likely break. And that is where you want to go in at the close over here to go for a buy. You can either buy here, or you can look for a retracement over here to buy over here to hit its way upwards. Amazing, isn't it? So this is exactly what that cues a lot of traders. A lot of traders will start selling over here, and that's where the market takes the money away from them. So this is one of the moving average that I add. Another indicator that you can add is the MACD. Okay, the MACD. So MACD, typically what I look for is the highs. So what you can see over here is that when the market made this high, the MACD was this high. Pretty big, not too bad, isn't it? Yes. But when the market went up higher, it made a higher high. However, the MACD is smaller than the previous high. This is contradicting, isn't it? So this shows us that this high isn't that strong, and very likely is not going to head up higher. Very likely is going to drop. Okay, so then the market goes sideways, went down, and then it formed a double top, same high, and then you see the one, it got, if you compare to the previous one, it got even smaller. If you compare to the previous two, this is the smallest of all. So this shows that likely this is not going to break up. So don't bother looking to go up. Instead, we can look to go for a sell. And then as we go along, if you see here, the market starts heading upwards over here, and you look at this MACD, it's even bigger than the previous hump. So it shows us that this momentum over here is the deal, is strong. So there is a good chance that, like I mentioned, it will hit up to the high over here, and then it may break through. Reading on this chart itself without fundamentals. Okay, so this is how we kind of read the market, right? And this is how I use and start. Previous video was pure naked price action trading. Now I start adding the indicators inside as a confluence, as it's like a clothes to put on to increase my arsenal, so that I can read the market with help and with increased probability. Alright, so I hope you like this week's video, and if you like what I teach, do head on to asiaforexmentor.com. This is where I teach in full on how I read the market, how I dissect the market, how we can trade in line with the market, and especially my Golden Eye group, where we do this on a weekly basis on what I trade and exactly all the pairs that I see as a whole, right? And the trades where the times where we want to go in to go for a big movement, or the times whereby we need to get in and get out quick, or whereby the times where we should not get in at all, based on the weekly live market charts. Alright, so that's all for this week. Cheers.
So I hope you enjoyed this week's episode. Do leave a comment below and let me know what you think, and it will be really awesome if you hit the thumbs up button. So I release new videos like this every Monday, and if you enjoyed it, do click on the subscribe button so that you will be instantly notified once I release a new episode. See you on the next video.